Antonio, the thesis here is Europe's doing better, and actually Italy's doing better than Europe. Is that true? What have you seen at Barclays in the last 6 weeks, 8 weeks, in terms of economic growth or lack thereof in Italy?
Yeah, I think it's the latter. I think it's throughout the euro area, we're seeing indeed a weakening of data. And that is not just the PMIs, the survey indicators, the hard data have come in weaker. And it seems to have to do also with net exports. And you know, Southern Europe, including Italy, benefit quite a bit from that. It's a very open economy, far more than the US. So I still think that the overall forces of growth are there. The ECB is super accommodative. Unemployment falling, investment still picking up. I mean, depends what happens with global uncertainty, but still the engines of growth are there. So I say, yes, we need to mark down growth a little bit, and I think the ECB will do that again. But the underlying forces of growth, I think, remain for now robust, in my opinion.
I mean, to be clear here, Mr. Draghi is not on the same path as Mr. Powell.
That's right. That's right. I think look at inflation. Actually, let's look at core inflation, the underlying inflation, 1.0. Okay, it came, you know, up from last year and probably will go a bit higher next year. But it's very gradual. So I think there is a broad consensus within the governing council to take it slowly, to be very cautious. Take this example of this week. Remember what happened with Mr. Novotny and the very, very unusual issuance of a statement by the ECB to say this is the view of Mr. Novotny, not the views of the ECB, of a more hawkish ones that Mr. Novotny was expressing regarding interest rate. This is remarkably unusual.